I want to talk to you today about something that's been sitting with me for the past couple of months. I've been having a lot of very similar conversations with different people, and ultimately it kind of follows a similar pattern. And it goes something like this. Somebody calls me. They've been in their condo for, 4, 5, 6, 7 years. Maybe they've, grown their family a little bit, but ultimately they're saying something like, this place was perfect when we bought it, but now it feels like it's half the size. Or it doesn't suit our needs the way it used to when we bought it. And they say, Damien, we want to upsize, whether that's into a townhouse or a detached house. But every time we look at the market, we don't know what to believe. There's a lot of uncertainty out there, and there's a lot of information that is construed to portray certain angles. And honestly, I get that, because headlines right now are confusing. One article will say that, we've hit the bottom. Another will say that there's room for another 20%. One will say that detached home sales have been surging, and another will, in the same sentence, tell you that they've actually decreased 30%. And if you're somebody in this position, you're sitting there trying to make one of the biggest financial decisions of your life, but there's all this noise, and you're not quite sure what to make of it and where to go. So today I'm going to, hopefully help you cut through a bunch of that noise. We're going to be looking at just real hard numbers in areas, and we're going to decode some of the headlines out there. I'm going to show you what is actually happening in specific markets by the numbers. And more importantly, if you find yourself in this situation, hopefully you get some good information out of it, and it's able to kind of help you start to take your next steps. Whether you're trying to upsize into that townhouse or detached home, or you're somebody in the position where you're looking to downsize, or you're just trying to figure out what's going on out there. So let's start with the big picture, and then we'll get specific. We're going to be covering about the last couple of months and reference some information, what sort of happened overall all year. So big picture, the market's not too dissimilar from last year. Sales are actually down about 3 or 4% compared to last year, but nothing dramatic. But that overall number is kind of useless. It's a blanket number, and if you've been paying attention to real estate for any amount of time, you know that there can actually be very different stories in submarkets. But one of the big overarching things we have been seeing is there is a split happening now, whether you're in Greater Vancouver or the Fraser Valley. And that is that detached sales have actually come up year over year. Now, as of April, it was around 14%. It cooled this in May down to just about like a 2% increase year over year. But overall, it represents about a 7 to 8% increase in detached sales year over year. Condos, conversely, have gone in the other direction. With an abundance of inventory and investor dollars, whether that's local investor dollars or overseas money, that's gone the way of the dinosaur for now. And townhomes have been relatively healthy. They've been a little bit stickier with their values now that prices have hit a certain point. And as far as year over year sales, it's not too different. But the real question is, why is it shaping up like? And more importantly, what does it mean for me? Let me tell you why detached is moving a bit more now, and it's actually a very human story. For the last few years, there have been a group of buyers that have been in a position that looks something like this. In 2017, 18, or 19, they bought a condo, and they've been paying their mortgage and building up that equity. Now, fast forward to 2021, 22, they're starting to think about upsizing, and they're looking at it. But the market is blisteringly hot. Prices are jumping up, and then we come to 2022, and rates have spiked. They're looking at the numbers, they're looking at their equity, and the math just doesn't work. There's a gap they need to be able to cross, but they are not able to do so. So they wait, and they wait, and then something starts to happen. Detached prices and townhomes start coming down. Of course, condos are also coming down, but not from a dollar value perspective, it's not the same. And then rates start to come down as well. But across Greater Vancouver and the Fraser Valley, the benchmark prices have come down. A couple of quick examples would be, let's say, East Vancouver. Those are down about 10% year over year. Or you can look at a place like New Westminster, and those have come down about 8% year over year. And on top of that, interest rates have come down and held quite steady for a number of months now. Now, there have been some fluctuations in the fixed rates, but that's gonna happen. And so that gap for a lot of those people has now become a lot more workable. Between what these buyers have additionally paid down in their equity and the equity they've built and what their next house costs has finally, for many of them, become feasible. So that bridge that a lot of those buyers wanted to cross a few years ago now all of a sudden looks a lot more doable. Between the downward pressure on detached prices and the additional equity they've built up, the numbers start to make a lot more sense for them. And that right there in a nutshell is the engine that is currently driving this surge in detached sales. It's not a flood of new buyers. It's not all of a sudden a random surge of confidence in the market. It's people who have been sitting on the sidelines waiting for the last, 2, 3, 4 years. It's those people who have been sitting on the sidelines and every 6 months they've been revisiting the math, looking and hoping that it starts to make more sense for them. And it's a very similar story in the Fraser Valley as well. But here's the kicker. Even though detached sales in many areas have actually increased year over year, it's still not enough to actually stop the downward pressure on prices. Yes, sales are up, but the number of sales that are actually happening are below a threshold you would need to call it a balanced market. Inventory still remains high, and the overall sales is considered low. But more homes are selling at lower prices. What that is telling you is that buyers are returning, but for pretty specific product in specific areas. And of course, buyers have a lot of leverage right now across almost all property classes. Now, here's where it gets interesting, because these increases in detached sales numbers are not happening everywhere. They're happening in specific places for specific reasons. And if you've been thinking about making that move, it's really important to know which side of the line you're on in that area. So let me walk you through where detached sales are genuinely gaining ground. And we're going to start with East Van. It's been very consistent over the past couple of months. And like I'd mentioned before, part of that is because it has seen a considerable drop in benchmark pricing over the last year. For a lot of move-up buyers coming out of condos or townhomes, like I mentioned earlier, the numbers are finally starting to make a lot more sense. To give you some context over the last couple of months, in April, year over year, they were up 13%, and in May, they were up 26%. Of course, some of the big draws of East Vancouver is it's very family friendly, walkable, connected to the SkyTrain, and many more things. Another area that's been seeing a lot of ground made up in the last couple of months is New Westminster. April saw a pretty considerable leap in sales volume at 40% year over year, and May, it's up 15%. And from an affordability standpoint, New West is one of the more affordable cities that is also connected to Vancouver. It's walkable, of course, has the SkyTrain, and has some really stellar neighborhoods. Specifically, I love Queen's Park, but I'm also a big fan of the Heights. People who are looking at Vancouver but maybe can't make the numbers work there often look to New West because you're only a 25-minute SkyTrain away from downtown. Burnaby is also one of the areas we're going to take a look at. Sales numbers for both April and May were both positive. And one thing you're actually seeing in Burnaby is that it's starting to tighten up a little bit. Active listings in parts of Burnaby were down anywhere from 8 to 14% year over year. Now, I promise to be straight with you, good news and bad news. So let's get into the bad news. There are more than a few detached markets out there which are genuinely struggling, and some of these won't surprise you at all. And we're going to start with West Vancouver. Of course, West Vancouver, luxury neighborhood, and for quite a few years, that area was largely dependent on offshore capital or international buyers. And for many reasons, whether that's the foreign buyer ban, increased speculation tax, capital gains changes, that pool of international buyers has been unable to participate and largely opted not to. And locally, the number of buyers that are looking for a $3 to $15 million house is quite small. So ultimately, if you own a home in West Vancouver and you're somebody who's looking to sell, my advice to you would be to price aggressively or be prepared to wait a long time. The next one, and this one's a bit surprising because it is one of my favorite areas in the Greater Vancouver area, and that is Port Moody. Now, Port Moody is also a smaller market, but the benchmark price for a house here is, this might surprise you, is actually higher than it is in East Vancouver. And it's because the benchmark price for a house here is still quite high that people who are making that move are having a really tough time making the numbers work. The gap is just still too large. And because it's a small market, these percentages I'm about to rattle off aren't as consequential, but in April, it looked okay. Detached sales were up about 14%, but then in May, they dropped 26%. So it remains flat to negative in terms of activity. So until either prices come down more or buyers looking to get into that area manage to accumulate more funds, whether that's stronger income or more equity, I would expect the trend we have been seeing to continue there. And the last two are two that mean a little bit more to me. And we're gonna start with Coquitlam, and that is my home market. In fact, I'm sitting here right now. April was marginally positive with about a 6% increase in sales volume, but May reversed that trend and dropped 13%. What might surprise you is that the benchmark price for a home in Coquitlam is actually quite comparable to that of a home in East Vancouver. Now, the market here hasn't fallen apart, but it hasn't exactly turned either. Yes, like many markets, year over year prices are down, but similarly to Port Moody, they're a bit stickier than some other cities. And of course, the story here is similar to a lot of other areas. If the home isn't well presented and well positioned in the market, you're just gonna be sitting. So if you're thinking about listing a home in Coquitlam right now, it's very important to know how you're going to position your home. Like, what segment of the market does this home occupy? Unless you have something that is truly special or unique, it's gonna be a lot tougher to attract a buyer with so many other options around. And the last one, and this one surprised me possibly the most, and that's going to be Maple Ridge. That's where I grew up. When I looked at the data, Maple Ridge does remain one of the most affordable towns or cities in the Lower Mainland. But despite that, the market there is still relatively soft. It was flat in April, down 9% in May, and you'd think that the increased affordability in Maple Ridge would have lent itself a bit better to some increased sales volume. But the data is telling us that for buyers, and especially young buyers, price isn't everything. Like, outside of the affordability factor, if you're living in Maple Ridge, you are going to need a car, which also, depending on your work, which means a longer commute, and then, it's also a different lifestyle out there, so there is the lifestyle trade-off to consider. And that is a trade-off that seemingly a lot of people are not willing to make despite the increased affordability there. But this has kind of been a truism in real estate, and that's location and lifestyle often trump affordability for a lot of people. Now let's talk about condos, because this is where the other half of that split market lives. And this is a harder story to tell. Condo sales are down, prices are down, and unlike the detached market, it's a lot more challenging to point to a specific area that is showing recovery. Condo market is essentially under pressure across the board. Here are the numbers, and this is an average or general approximation of the Greater Vancouver area, not including the Fraser Valley. Sales are down 10.5% in April and down another 7% in May. As for the benchmark price, we've seen a decrease of about 8% year over year. Now, once again, that's an average. There certainly are markets out there that have seen steeper declines. So why is this happening? And there are a few factors here, and some of them are pretty obvious. And the biggest one is the exodus of investors. For years, across the Greater Vancouver area, investors were a big reason why a lot of these high-rise projects were getting built, well, and low-rises too. And a lot of these people bought in 2020 and 2021 when interest rates were historically low. Now, those places are either completing now, or those mortgages were up for renewal, and of course, interest rates are noticeably higher. Now, all of a sudden, the numbers do not make sense. This is also combined with the downward pressure they've been seeing on rent. On top of that, strata maintenance fees have increased, property taxes have gone up, and investment property that made sense a few years ago now just doesn't make sense for them. And this ties into the second part of the equation, and that's going to be oversupply. developers across Greater Vancouver hold a substantial amount of unsold homes. And these are homes that are just sitting there vacant, brand new, empty. This is the highest level of developer-held inventory we've seen in 24 years. New towers completing in Burnaby, Coquitlam, and Surrey are releasing hundreds of units into the market that is already digesting units from every conceivable direction. And the third force is, well, the absent group of buyers. And I'm not just talking about investors, but I'm also talking about first-time home buyers. Condos for many people are often the first step, on the property ladder. But right now, a lot of those first-time buyers are very gun-shy. They're being very cautious, and rightfully so. There's downward pressure on prices. There's a lot of uncertainty with just global factors, and they wonder if they're catching a falling knife. I actually made a video about this last month. Now, I want to be clear here. If you own a condo and you're watching this, don't hit the panic button. Try to look at the long-term picture, because that's probably why you bought it. For well-located, well-managed buildings across the Greater Vancouver area, the picture is not nearly as bleak as I've painted it so far. But in the short term, if you're thinking you're going to make a move in the next 12 to 18 months, you need to accept this as a reality and plan around it. Because, I know a lot of people out there say, I hope it gets better, but hope is not a plan, so don't plan for that. So what does this mean for upsizers? And right now, I want to talk directly to the person I referenced at the beginning of the video. The person with the condo, and maybe they've had a kid, or maybe they have two, and they're really trying to figure out, is now a good time for me to make that move? Because I get asked this question a lot, and the honest answer might surprise you. Of course, you're in an interesting position. Yeah, the condo that you bought whenever you bought it is realistically down in value anywhere from 5 to 15%, excluding Surrey Central, because that place is having a really tough time. And on paper, that hurts. But on the other hand, the gap has closed quite significantly, because maybe the next place you were looking at buying has actually dropped, $100,000, $200,000, $300,000. Now, I'm not saying that just because that gap has narrowed, that financially it's a lot easier to deal with, but I'm just saying that is the reality of it. Even though both values are lower, your buying power has actually increased. And that's the situation that many upsizers find themselves in today. And it's a situation that doesn't last forever. Now, I'm not saying it's going to end in a week or two, but I mentioned that 12 to 18 month timeline before. It could happen in that timeline. It could happen before that. And of course, it could happen after. But one thing I will point to is historically, the detached market is a bit of an indicator. Now, I'm not saying a couple of months of better activity is an indicator in any way, shape, or form, but I would keep an eye on that. And I'm not telling you the market is perfect either. In fact, most of the time when somebody buys their first home, or they upsize or downsize, the conditions are almost never perfect. Even for those people that have been waiting years to make their move, waiting for those perfect conditions, the best they can generally hope for is for things to feel right. But the coming months are probably as close to right as you're going to see for some time. What I always say to people is, do the math for your specific situation. Talk to your mortgage broker, talk to your realtor, and take a good hard look at the numbers and see if it's something that does make sense for you. Or even better, talk to me. But don't let the noise of the headlines paralyze you from making a decision that you think would be best for yourself or your family. And now we're going to talk about the other side, and that is downsizers. And they're in an entirely different situation. Maybe you've been in your home for, 15, 20, 25 years. The maintenance is a bit much, or it's too much space. The mortgage is either nearly paid off or has been for years. You have all that equity sitting there. It's the house that you've raised your family in. You can't take a look anywhere in the home without having, some memories come up, whether, it's your kids growing up, or scraped knees, or, Jimmy falling out of the tree in the backyard. But it also raises your blood pressure every time you think about all the maintenance. You want to simplify. You want to move into something smaller, maybe a different area. Maybe you want to be closer to some greenery, or you want a quieter neighborhood. Whatever the reason is. So here's what you need to know. If you're selling a detached home in any of the areas I've talked about, know that you're going to be taking a haircut. It's inevitable. But if you're selling in, let's say, East Van, New West, or Burnaby, conditions have improved slightly. But once again, I'm not saying the downward pressure on prices have stopped, but at least things are a bit better there compared to some of the other areas I've talked about. And if your home is well presented, you've positioned yourself well in the market, you have a pretty good shot of actually selling your home and making that move you want to make. But it's also really important to consider what you're going to be moving into, because this is enormously important. If you're planning to move into a condo, for example, you're stepping into the softest segment of the market. The inventory here is sky high, the leverage you hold is through the roof, and this means you're buying at a discount, and depending on where it is, a very steep discount. The thing I'd caution you about is going to be timing. And for somebody in your position, you're probably going to want to sell your home first, because it's ultimately, depending on what you're looking for, going to be easier to find the home you want to buy than it is to sell your home. Of course, I always caution giving yourself ample time to do so, or if you're looking for something very specific, don't be afraid to look for the home you want to move into first, but just make sure that if you're writing that offer first, make sure you're giving yourself long completion dates. And of course, you're going to want to do all the other stuff. Like you want to, I always say this to anybody buying a strata property, half of what you're buying is the home, and the other half is the strata. You absolutely need to make sure that you are buying into a good strata. And by a good strata, I mean stratas that are proactive or financially well managed, and they're saving money in the CRF. Their operating budgets aren't ballooning, or there's not a bunch of deferred maintenance in the building, or even better, or there aren't issues in the building. Plumbing is a big one, and I would pay particular attention to that. So let's bring it all back to where we started. The market is confusing right now. I understand that. The headlines are contradictory, the data is nuanced, and making a move feels like you're taking a huge risk because you can't get a clear picture. But here's what I want you to take away from this. What that is happening in the market, like any change in a market, is creating opportunities if you understand which side of it you're on. If you own the right home in the right area, you might genuinely be positioned in an area where things are improving. And if you're sitting on a condo with the equity you've been waiting to reallocate, the gap between where you are and where you want to be has shrunken significantly. And that window is open for you, whether you want to wait or whether you want to make that move now. And if you own a condo that you are thinking about selling, you really need to be honest with yourself about where your specific market is. I work in this market every day. I know Coquitlam, Port Moody, Port Coquitlam, and New Westminster as well as anybody. And if you want to know specifically what this means for your situation, your property, your equity, your timeline, reach out. I'm not going to give you a sales pitch. I'm just going to give you straight answers and honest advice. Anyways, as always, thank you for watching, and I'll see you in the next one.